Welcome to the deep dive. It is 1 p.m. Central Time, Monday, November 3rd. And we're not just looking at blinking prices on a screen today.
No, not at all. Think of it more like we're, down in the engine room of the market.
Exactly. Our focus today is purely quantitative. We're leaning on the AI models from the IntelliTraders team. It's our midday check-in.
Right. And the goal is simple. Give you, the listener, a real shortcut to understanding the top 40 high-volume trades, what's actually moving them.
Yeah, we're going beyond the headlines, really digging into the mechanics.
Absolutely. We're unpacking the signals the machine itself generates, things like volume ratios, momentum trends, and something really key, daily true value. That's the AI's take on hidden price contraction.
Okay, so we're guiding you through, 28 specific stocks and ETFs, high liquidity stuff?
That's the list. We're looking at where they stand versus long-term averages, how buyer and seller power is shifting during the day, and, their immediate potential for volatility.
All right, let's get into this data then. Because today's numbers, well, they seem defined by some incredible tension. Real contradictions between, say, long-term value and immediate speed.
That's a great way to put it. Tension is the word.
So we have to start where the money is flowing, right? The sheer volume leaders. How do they stack up against their trend lines?
Okay, volume. Let's talk volume.
When we look at just absolute volume traded by midday, one stock has, it sucked up liquidity way above everything else. That's KENVU, ticker KVUE.
KNVU, yeah. Big one today.
Trading around, $16.42? But the volume number is just huge. 149,439,610 shares traded already.
Wow, yeah, that's not just a busy day. That's a massive liquidity event for KVUE.
And that spike in volume, it creates this, almost schizophrenic signal when you look at its trend position.
Schizophrenic is good because the AI notes it's trading below its 200-day moving average.
Right, the classic sign of long-term weakness. Suggests the trend has been down for months.
And here's the twist. It's simultaneously trading above the 200-hour moving average.
Okay, so that's the definition of a mixed signal, isn't it?
Yeah.
That huge volume, nearly 150 million shares, it's powering this really strong, very recent short-term rally.
A forceful push upwards, yeah.
But it's happening within that bigger, established downward trend. It's like it's fighting the current.
Exactly. Battling the tide is a perfect analogy. And the volume ratios, they confirm the intensity peaked earlier in the day.
How so?
Well, the daily volume ratio is enormous. It's sitting at 320% of yesterday's total volume.
3 times the normal action by 1 p.m. That's huge.
It is, but if you zoom into just the last hour, the last 60 minutes, the action's basically evaporated.
Really?
Yeah, last hour's volume is only 5% of the volume from the hour before it. So whatever drove that spike, it's cooling off dramatically now.
Okay, and this cooling off after that massive spike, this is where the AI flags a really deep contradiction in its valuation model.
Yeah.
This is where we need to talk about true value.
Yes, this is crucial.
So for you listening, how does the machine actually calculate if a price is overvalue or undervalue? What is true value?
Okay, think of true value as the AI's calculation of, let's call it intrinsic price equilibrium. It's not just a simple average price.
Okay.
It's dynamic. It looks at historical price contraction, expansion, factors in volatility, liquidity events, basically trying to figure out where the price should be trading if it wasn't being pushed around by, extreme momentum or panic selling.
So it tries to filter out the noise.
That's the goal. Filter the noise, find the signal of underlying value.
All right, so based on that filtered long-term intrinsic price, the AI flags KVUE as 31% undervalue on the daily time frame.
Correct. The machine is essentially saying, hey, fundamentally, looking back, this stock is trading at a pretty deep discount compared to its usual equilibrium.
But here's the contradiction you mentioned.
Here's contradiction. When the AI zooms into the short term, just the 1 hour time frame, it immediately flips. It says KVUE is 10% overvalue.
Wow. Okay, so that huge morning volume surge, the 320% spike, it temporarily overshot the short-term value.
Exactly. It created a short-term premium for anyone buying right in the heat of that moment, even though the bigger picture, the daily view, still says it's generally cheap.
Fascinating. Now let's tackle those directional signals. These can sometimes confuse people. For KVUE, both daily and hourly buyer-seller direction are listed as seller UP, and it's combined with an H-trend, high trend.
Right.
We need to be crystal clear here. If the price is moving up, why does the AI say sellers are in control or seller UP?
Okay, this is a proprietary signal, and yeah, it's key to understand. When the AI flags seller UP in a high trend situation, the UP part refers to the aggressiveness and intensity of the selling.
not the price direction.
not the price direction itself.
Mm-hmm.
It means sellers are actively, aggressively unloading shares at high velocity. But because the underlying trend momentum is so strong that H-trend, the buyers, are absorbing those shares just as fast, maybe even faster.
So the net result is still a price increase.
Correct. You've got aggressive selling being met or even overwhelmed by stronger demand. So it confirms that big price jump was likely driven by sellers aggressively taking profits, but the market just soaked it all up.
That's a critical distinction. Aggressive liquidation just getting absorbed.
Yeah.
Let's pivot to the other volume heavyweights. They seem to have a much cleaner trend profile.
Yeah, much cleaner. Next up, you've got NVDA, NVIDIA Corp, trading around $209.30, and then CIFR, Cipher Mining, at $22.33.
And the volumes there,
Yeah.
still huge, right?
Still huge. NVDA around 117 million shares, CIFR about 107 million. So big volume, but yeah, far less conflicted signals compared to KVUE.
How so? Less conflicted.
Well, both NVDA and CIFR are showing what looks like sustained structural strength. The AI flags them as trading above both the 200-day MA and the 200-hour MA.
Okay, that's consistent strength, long and short term aligned.
Exactly. And both open the session with a decisive gap up. So it confirms that uniform, continuous bullish action across both timeframes.
So there's always a but, isn't there?
There's usually a but. Here, the AI immediately flags a major issue: valuation extremes.
Overvalued.
Big time. NVDA is flagged as an astounding 108% overvalue based on that daily crew value calculation.
108%. Wow.
Yeah. And CIFR isn't that far behind, flagged at 69% overvalue on the daily. The machine is basically screaming that compared to their fundamental price equilibrium, the market's paying massive premiums for these names today.
And does that extreme daily valuation maybe help explain the volume profile now? Because you mentioned KVUE's volume dried up. What about NVDA and CIFR?
It absolutely connects. Both NVDA and CIFR have incredibly low hourly volume ratios right now. We're talking only 2% of the previous hour's volume for both.
Only 2%, so the action just stopped.
Pretty much. It's a classic sign. The initial explosion of liquidity and momentum, the thing that drove the gap up and pushed the valuation sky high, seems to have completely dried up by midday. The party moved on, perhaps.
Okay. And the buyer-seller direction, does that show fatigue too?
It does, yeah. Look at NVDA. The daily time frame shows buyer UP confirming that bullish control structurally. But the last hour, it shifted to seller down.
Okay, seller down. What does that imply? If seller UP was intense selling.
Right. Seller down suggests selling activity has maybe increased, but its intensity is reducing. It's likely a result of some profit taking combined with that general volume slowdown we just talked about, less aggressive selling.
Got it. And CIFR, you said it was slightly different.
Yeah, CIFR shows a different kind of nuance. It's flagged as buyer down loading UP on the daily.
Buyer down loading UP. Break that down.
Okay, buyer down suggests the buying intensity has temporarily decreased, maybe paused. But that loading UP flag, that indicates the AI sees buyers positioning themselves, maybe accumulating on small dips, getting ready for the next potential upward push.
So they're reloading their engines, maybe viewing dips as opportunities.
That's a good way to think about it. Reloading for another run, suggesting that short-term pullbacks are being bought.
Okay, let's move into section 2 now. We're going to focus purely on that core insight from the AI, the true value metric. You said this defines enthusiasm or rejection more accurately than just price change.
Yeah, I think so. Because it's trying to measure that disconnection, that enthusiasm premium or panic discount relative to a calculated baseline. We're looking for the absolute extremes here, the wildest overvaluations and undervaluations.
And judging by NVDA and CIFR, some stocks are showing pretty extreme overvaluation today.
Well, absolutely. Some are truly off the charts. And remember, this isn't just about a high PE ratio or something. This is the AI explicitly saying the current price is way disconnected from its calculated long-term intrinsic path.
So who's leading the pack in terms of being overvalued?
The highest by a really wide margin is Wolf, TeraWulf NENC. The AI has it sitting at a mind-boggling 204% overvalue on the daily time frame.
204%.
Yeah. 204. When the AI flashes a number like that, it's not just a mild warning. It's basically screaming that this stock's current price is almost purely a function of speculative velocity. It needs some serious fundamental justification, fast, or it risks a massive snapback, a reversion to the mean.
So 204% overvalue means the price is more than triple its calculated equilibrium.
Essentially, yes. It's followed, though not quite as extreme, by JOBY, Joby Aviation, at 188% overvalue daily. And RGTI, Rigetti Computing, at 168% overvalued daily.
Okay, WULF, JOBY, RGTI.
Right.
The top three in terms of price disconnection today.
They're the leaders, yeah.
Let's dig back into WLF for a second. 204% overvalue. But the AI also notes its 5E rank, the implied volatility rank, is 105% downwards. That sounds counterintuitive.
It does sound a bit odd, doesn't it? Being massively overvalued, you'd expect high implied volatility, high fear. But a downward 5E rank suggests that even though the price is astronomical, the market's expectation of future big swings, future volatility, is actually easing off.
So maybe traders think this crazy high price is actually sustainable.
Mhm.
Or maybe the run-up is just exhausting itself, and they expect a more stable, albeit high, plateau.
Could be either of those, yeah. The expectation of more explosive moves seems to be fading, even at this peak, and the short-term directional data kind of mirrors that tension.
Well, so.
The hourly buyer-seller signal for WLF is seller UP.
Aggressive profit-taking happening right at this peak valuation. Makes sense.
Exactly. People hitting the sell button hard up here.
Now compare WLF with JOBY and RGTI. You said JOBY is 188% overvalued daily, but the AI notes it was only 7% undervalued just before the market opened.
Yeah, look at that jump. It suggests the stock rocketed almost 200% relative to its calculated value, basically right at the opening bell or very soon after.
And RGTI, similar story.
Almost identical setup. It was 10% undervalued pre-market, then bam, jumps to 168% overvalue. So for both JOBY and RGTI, the entire massive valuation dislocation seems to have happened in just the first few hours of trading today.
Wow. Pure opening momentum creating those gaps.
Seems like it, but maybe the most explosive outlier when you factor in the sheer liquidity driving the valuation is Terns Pharmaceutical.
Turn. Okay, what are its numbers?
It's 113% overvalued daily, which is high, definitely, but maybe not quite WLF or JOBY levels. But the volume is what's terrifying here.
How terrifying.
Terns daily volume ratio is 2,804% of the previous day.
Wait, say that again? 2,000?
2,804%. 28 times the normal liquidity has flowed into this stock just today.
Okay, let's just pause on that.
Oh.
2,804%. That's not just a high volume day. That has to be some kind of company-specific, major news-driven event, right? An absolute liquidity storm.
Has to be. And it's no surprise then that the AI notes it was driven by an 89% overvalued pre-market gap up.
So it gapped up massively on huge pre-market value, and then the volume just exploded even further.
Exactly. This represents truly explosive and likely unsustainable momentum. It's probably driven by external news that just completely overrides any sense of gradual price discovery. The AI is essentially flashing a giant red alert on the sheer velocity here.
Okay. Wow, so that's the extreme overvalue side. Let's flip the lens now. Let's look at the deep value territory. Which stocks are flagged for significant undervaluation compared to their daily true value?
Right. These are the names the AI thinks are trading, unfairly cheap based on its calculations.
We already mentioned KVUE, which was 31% undervalued daily. Who else is down there?
KMB, Kimberly-Clark Corp, is a close second. It's flagged at 26% undervalued daily.
Kimberly-Clark, okay. And what's its volume story? Is it quiet?
Not at all. KMB, just like KDUE, is experiencing a massive liquidity spike. It's trading at 645% of the previous day's volume.
645%. But it's undervalued. And did it gap up like Turn?
No, opposite. KMB opened with a decisive gap down.
Okay, so this is a totally different story than Turn. Turn had massive volume driving the price up into extreme overvaluation. KMB is seeing massive volume apparently selling the price down into deep undervaluation.
Exactly. This scenario usually points towards something like poor earnings, maybe a really negative guidance revision, or perhaps significant institutional selling. Dumping, really. That the AI judges as an overreaction compared to the stock's historical equilibrium.
So potentially panic selling, creating value in the AI's view.
That's likely what the signal implies, yeah. An overreaction creating a discount.
Interesting. Do we see any themes in the undervalued names?
We do, actually. There's a clear thematic undervaluation appearing in the counterindex plays, the market hedges, and also some large-cap value stocks.
Like what?
Well, SQQQ, which is a leveraged inverse ETF for the QQQ, it's showing 18% undervalued daily.
Okay, the NASDAQ hedge is cheap.
Then you've got AT&T at 19% undervalued daily, and VZ, Verizon, is 11% undervalued daily.
So big telco value names also looking cheap.
Right, and SPXU, the inverse S&P 500 ETF, is 10% undervalued daily.
So the S&P hedge is also discounted. The consistency there is pretty telling, isn't it?
It really is. While names like WLF and NVDA are commanding these huge premiums, the hedges, SKQQ, SPXU, and those traditional value names, T, V, Z, KMB, are being pushed into deep discount territory.
So the AI analysis paints this picture of a really bipolar market today.
Exactly. You've got extreme risk-on speculation happening in a few specific momentum names, but it's being countered by pretty aggressive risk-off positioning and a rejection of value assets elsewhere.
In that contrast, KMB seeing huge volume driving deep discounts, while Turn sees even more insane volume driving astronomical premiums. That's really the quantitative signature of today's market structure, isn't it?
Perfectly put. That's the tension we talked about right at the start.
Okay, let's shift gears a bit. Moving from that longer-term value pressure to the more immediate short-term kinetic energy. We need to talk about the squeeze signal from the AI.
Ah, yes, the squeeze. Important one for volatility.
So for you listening, maybe explain squeeze again briefly. The AI squeeze indicator. It's like a measure of potential energy.
That's a great way to think about it. Potential energy. It identifies price action that's been really compressed, tightly coiled, like winding up a spring.
Suggesting that when it finally moves, it's likely to move violently, explosively in one direction or the other.
Precisely. It's a volatility predictor, but it's focused specifically on that compressed price structure, signaling a potential breakout is brewing.
And where is that coiled energy most apparent today, according to the AI?
It's showing up most strongly in the high beta names, maybe unsurprisingly, particularly in the Tesla complex.
Tesla, okay.
Both TSLL, which is the leveraged Tesla ETF, and TSLA itself, the main stock, are showing the maximum possible squeeze score the AI calculates. That's a squeeze of 18.
18, the max score. So the machine is saying the pressure cooker is set to absolute maximum for both.
That's the signal, yeah. Maximum potential energy stored up.
And it's kind of remarkable that the leveraged product, TSLL, trading around $22.55, and the parent stock, TSLA, at $467.30, share that identical maximum squeeze reading.
It is interesting. And maybe more importantly, they also share a completely uniform bullish structure according to the AI.
Meaning?
Both are flagged as above the 200-day MA, above the 200-hour MA, and they show consistent buyer UP direction on both the daily and the hourly time frames.
Okay, so strong trend, consistent buying pressure on all time frames, and maximum squeeze.
Exactly. That combination uniform directional control plus the squeeze 18 score suggests the AI sees basically no immediate selling resistance and maximum potential for a really sharp upward breakout.
Wow. Any other notable squeeze figures jumping out?
Yeah, a few others. PFE, Pfizer, is showing a squeeze of 17.
Pfizer, 17. That seems unusually high for a big pharma name, doesn't it?
It does. It suggests some significant short-term structural pressure building there, which is interesting. We also see QS, QuantumScape, at a squeeze of 7, and SOXL, the semiconductor bull ETF, showing a squeeze of 6. Still elevated, but not that extreme 17 or 18 level.
Okay, now let's circle back to those directional signals, the buyer-seller UP-EWN stuff. Let's focus on the shifts where the daily view, the longer-term picture, actually conflicts with the immediate hourly action.
Right. These shifts are key because they show where the market might be changing its mind in real time, where fatigue might be setting in.
Or maybe where profit-taking is hitting the morning winners.
Exactly. That conflict is often a hallmark of that. Take SUQQ, the inverse NASDAQ ETF we mentioned earlier.
Okay, so QQ, it was undervalued daily.
Right. And its daily direction is buyer UP, meaning structurally, aggressive buying has been present, likely people positioning for a market drop.
The hourly signal.
The hourly signal has flipped to buyer down.
Okay, buyer down. So the buying intensity has decreased just in the last hour.
Precisely. The short-term buying pressure for that market hedge seems to be weakening, even if the longer-term positioning for a decline is still flagged as buyer UP. The immediate momentum is fading.
And we saw a similar fatigue pattern in NVDA earlier, didn't we?
We did.
Yeah.
NVDA was buyer UP daily, but shifted to seller down hourly.
Suggesting the aggressive buyers who drove that morning gap up are kind of ceding control to sellers, maybe taking profits, reducing the intensity of that upward move.
Yeah, the upward force is less intense now. But now look at the opposite. The stock's showing just relentless, sustained buying power, where the daily and hourly signals are perfectly aligned.
Confirming immediate, unyielding strength.
Exactly. Who's on that list? Well, TSLL and TSLA, as you'd expect from their squeeze scores and trends, but also AAL, American Airlines.
AAL.
Okay.
Also Turn, which makes sense given that insane volume, even though it's massively overvalued.
Hmm.
Also, LUMN, Lumen Technologies, PLTR, Palantir, and TSLY, another income ETF.
And for all of those, the signal is consistently buyer UP or maybe loading UP on both daily and hourly.
Correct. Consistent buying pressure across both time frames. The momentum is holding strong, at least for now.
And what about persistent selling pressure? We talked about KVUE showing seller UP on both. Anyone else? The main other one showing that consistent selling intensity is Iron Ltd. It also shows seller UP on both daily and hourly.
Okay, so for iron, that signals aggressive, sustained liquidation pressure, likely leading to price weakness unless some external demand steps in to absorb it.
That would be the typical interpretation, yes.
Now, let's quantify that short-term heat using the hourly true value. Which stocks are running hottest right now?
Yeah, hourly true value isolates that immediate momentum premium and turn. Fresh off that 2,804% volume spike is just unbelievable. It's showing 105% overvalue hourly.
Hourly, 105%. That's not just momentum,
That's a pure bubble of short-term velocity. It just can't be sustainable logically.
Anyone else running really hot on the hourly?
LUMN is also extremely hot. It's showing 57% overvalue hourly, so massive intraday acceleration there too. Then you have TSLL at 18% overvalue hourly and AAL at 13% overvalue hourly. Still strong, measurable short-term premiums.
So chasing these names right now mid-session means you're definitely paying a pretty heavy price premium just for that immediate momentum.
You absolutely are, according to the AI's value calculation. But conversely, the AI also shows where the short-term cool-off is happening, where prices have maybe dipped below their hourly true value temporarily.
Taking a breather, maybe?
Taking a breather, exactly. We see this mostly in some of those high-volatility crypto-linked names we touched on earlier.
Like which ones?
ETHA is showing a negative 8% undervalue hourly. IBIT is also a negative 8% undervalue hourly. MRI is down at negative 13% undervalue hourly, and ACHR is negative 17% undervalue hourly.
Okay, so those assets are maybe digesting the morning's moves, taking that necessary breather after a high-energy start.
Seems likely. This whole analysis of squeeze, directional flow, hourly value, it really tells us the power dynamics are shifting incredibly fast today. The AI is giving us almost a real-time map of where energy is building, squeeze, and where it's being spent or getting exhausted. Directional shifts, hourly value.
It's a lot to track. And hey, if you are enjoying these kinds of insights, digging into the AI data like this, make sure you hit that follow button. Turn on notifications too, so you're the first to get our market analysis update each day.
Yeah, definitely do that. Helps you stay on top of these rapid shifts. Okay, let's shift perspective again slightly. Let's look at how these dynamics are playing out across entire sectors or themes. Using ETFs and thematic groupings is a good way to do that.
Right. The AI can give us a powerful summary view this way, especially if we compare those leveraged index bets against each other.
Exactly. And the clearest confirmation, maybe, of today's generally bullish market sentiment comes from comparing TQQQ against TQQ.
Okay, TQQQ is the Ultra Pro QQQ ETF, the 3x long NASDAQ 100. CQQQ is the Ultra Pro short, the 3x inverse.
Correct. So TQQ, the bull bet, it's sitting around $118.57. The AI notes it had a gap up open. It's trading above both the 200-day and 200-hour MAs, and it's calculated as 15% overvalue daily.
Okay, strong trend, positive open, slightly elevated valuation. Bullish picture.
Bullish picture. Now look at CQQ, its inverse counterpart. It's basically the perfect mirror image.
How so?
SQQQ is trading down around $12.96. It had a gap down open. It's trading below both the 200-day and 200-hour MAs, and the AI calculates it as 18% undervalued daily.
Wow. Completely polarized signals. Gap down, weak trend, deep undervaluation for the short bet.
Exactly. It's such a clear signal. It confirms that, according to the AI's analysis of the NASDAQ complex at least, the overall market trend today is overwhelmingly positive, and it's just crushing that inverse play.
Makes sense. What about the main index tracker itself, SPY, the S&P 500 ETF? Is it showing the same kind of bullish intensity?
Actually, no. SPY, trading up near $683.59, kind of offers a reality check on the intensity level for the broader market.
How's that?
Well, first, its volume is really quiet, only 36% of its previous day's total volume by 1 p.m. That's quite low.
Okay, so not much conviction in the broader market move.
Seems that way. And the AI registers it as only 4% overvalue daily, pretty modest. But crucially, it's already cooled off to being 1% undervalue on the hourly time frame, and it's flagged with N trend, which means neutral trend.
Okay, so SPY is basically saying the extreme action we're seeing in names like WOLF or TURN is highly concentrated. The core market itself is actually pretty subdued by midday.
That's exactly what it implies. The fireworks are in specific pockets, not broad-based across the S&P 500.
Got it. Now, let's look at that crypto complex again. You mentioned EVIT, ETHA, IRON, MARA, Wolf, CIFAR. What's the theme there?
Volatility. That's the central axis connecting them all. Many of these names have really high 5e ranks, indicating strong market expectations for future big swings.
Right, high implied vol. And we already talked about the extreme daily overvalue in WOLF, 204%, and CIFAR, 69%.
We did, but the AI analysis within this crypto cluster is really useful for differentiating. It's not monolithic.
How is it differentiating?
Well, look at ETHA and IBIT. These are more like pure cryptocurrency trust plays. The AI notes both had a gap down open, and both are showing undervalue on both the daily and the hourly timeframes.
Okay, so the direct crypto exposure plays seem to be facing bearish pressure, maybe profit-taking today.
That's what the signal suggests, but then look at the miners, IRON and MARA.
What about them?
They show internal strength relative to the trusts. Both IRON and MARA opened with a gap up.
Interesting. So even within this highly volatile crypto-related sector, the AI is managing to distinguish between the assets that are maintaining upward velocity, like the miners, and those that seem to be pulling back, like the trusts.
Exactly. It's picking up those divergences within the theme.
Okay. Finally, let's touch briefly on fixed income. You mentioned HYG, the high-yield bond ETF, and LQD, the investment-grade bond ETF. What's the picture there?
Compared to equities today, the environment in fixed income seems, well, almost placid.
Placid. How so?
Both HYG and LQD had a gap down open. Both are trading below their 200-hour moving average. And maybe most telling, they exhibit extremely low IV ranks, only 8%.
Only 8% IV rank. So minimal expectation of future volatility in bonds today?
Very little, yeah. And their valuation metrics, they are exceptionally tight.
Tight, meaning close to zero over undervalue.
Pretty much. Despite that gap down open, HYG is calculated as only 2% overvalue daily, and LQD is just 1% overvalue daily.
Okay, so even though they open lower, their actual price hasn't really stretched much relative to their calculated true price equilibrium.
Exactly. The machine sees stability and very low dispersion in fixed income today. A stark contrast to the wild swings in some equity pockets.
All right, the AI isn't just crunching trend and value numbers, is it? It's also designed to flag anomalies, things that just look weird.
That's right. It has an unusual activity flag.
So let's turn to those now. Which symbols got flagged for unusual activity today? These are where trading patterns are deviating significantly from the norm.
Yeah, often suggesting maybe unexpected institutional moves or large-scale positioning changes.
Those on the list.
Okay, the symbols flagged midday for unusual activity are
COQQ,
the inverse NASDAQ. Okay.
F Ford,
Interesting.
ETHA, the Ether Trust, T AT&T, LQD, the investment grade bond ETF, TSLY, that income ETF, SPY, the S&P 500 tracker, and SPXU, the inverse S&P 500.
Okay, looking at that list. SCOQQ, ETHA, T, LQD, TSLY, SPY, SPXU, and Ford. Is there a common thread there? Well, a lot of them are either large volume ETFs, index-related instruments, or major macro plays, right? You've got the inverse index ETFs, SQQ, SPXU, the main index ETF, STY, a major bond ETF, LQD, a crypto play, ETHA, and big traditional value names, FT.
So that clustering tells a story in itself. The AI is maybe alerting us that there's abnormal volume or unusual directional complexity centered around these macro hedging instruments and maybe traditional value plays.
That seems like a reasonable interpretation, yeah. It suggests maybe heightened volatility expectations or perhaps significant repositioning related to overall market risk assessment rather than just pure momentum chasing in tech names.
Okay, and this idea of unusual activity brings us back to maybe the clearest indicator of sudden unexpected action. Those volume ratios.
Absolutely. We have to revisit the extreme outliers there, the true liquidity events of the day.
We really can't overstate turn, can we? 2,804% of previous day volume. That liquidity event is just a complete total outlier that dictates everything about its price action today.
It really is category defining today. And then KMB, Kimberly-Clark, that deeply undervalued value stock, it's the next major volume event at 645% of prior day volume.
Driven by selling, likely.
Driven by selling, yes. We also mentioned IRON at 314% and KVE at 320%. They also had liquidity spikes far exceeding what you'd normally see.
So those four turn, KMB, IRON, and KVE, They really account for the bulk of the unexpected liquidity in the market today, don't they?
They certainly stand out, and they present that fascinating dichotomy we keep coming back to. Extreme speculation on one side, turn, and potential panic or heavy selling on the other, KMB, maybe KVU initially.
And to really understand the full range of market activity today, we have to contrast those massive volume spikes with the stocks showing the lowest volume ratios, the ones where liquidity seems to have just dried up.
Exactly. Who's at the bottom of the list in terms of relative volume? RKT, Rocket Companies, is trading at only 31% of its previous day's volume.
Wow, only a third.
SPY, as we noted, only 36%. QQQ, the NASDAQ 100 ETF, only 40%. And AMZN, Amazon, is only at 41%.
Okay, so these are typically high-volume titans, SPY, QQQ, Amazon, that are experiencing a significant liquidity drain today, trading at less than half their normal pace.
Exactly. And the case of Amazon, AMZN, trading around $255.27, is almost a perfect illustration of that momentum exhaustion idea.
How so?
Well, it's still a high-volume stock in absolute terms, right? 68 million shares traded. And its technical position looks good on the surface. Above both 200 MAs had a gap up open.
It looks strong, yeah.
But it's trading at less than half its previous day's volume. That dramatically reduced liquidity strongly suggests that the initial strong opening momentum just fizzled out. It was followed by a substantial slowdown.
And does the AI's directional data back that up for Amazon?
It does perfectly. The AI flags AMZN as a seller UP on the daily time frame, but shifting to seller down on the hourly.
Ah, okay. So aggressive selling overall today,
Yep.
but the intensity of that selling has decreased in the last hour, matching the volume drop-off. The machine confirms the momentum has substantially leaked out of Amazon by midday.
Precisely. So this contrast is key. You have the early volume leaders like KVUE, where the liquidity peaked early and is now cooling. You have the extreme outliers like Turn and KMB caught in massive, probably news-driven events right now. And then you have giants like Amazon seeing their momentum just drain away.
It really paints a picture of today's market structure being highly consolidated, incredibly fast-moving where it is moving, but very uneven across the high-volume landscape.
Uneven is a great word for it. Highly uneven distribution of activity and conviction. Tag outro.
Okay, so let's try to synthesize all this AI-driven data for you, the listener. If we had to pick an overriding theme for today, it really seems to be this powerful tension, this battle between momentum and structural value.
I think that's spot on. The machine has clearly identified these massive premiums being paid purely for velocity in stocks like Well, remember, 204% overvalue, and Turn, 113% overvalue, but driven by that, frankly, unbelievable 2,804% volume spike.
Pure speed premium.
Pure speed premium. Yet at the same time, we see other high-trend names, particularly TSLA and TSLL, consistently showing maximum squeeze, that score of 18, and those relentless buyer UP signals across all time frames.
So the machine is confirming that, at least in certain pockets right now, momentum seems to be completely overriding any traditional warning signs from price contraction or fundamental value.
It certainly appears that way in those specific names. But then, on the complete other side of the spectrum, the AI has flagged what it considers genuine deep discounts in large cap value names, like KMB, Kimberly-Clark sitting at 26% undervalue, even as massive volume drives it down.
That polarization really is the clearest takeaway, isn't it? Extreme premiums coexist with extreme discounts driven by vastly different flows.
It is. And the kind of machine insight we've tried to unpack today using metrics like daily true value, the squeeze score, comparing those detailed directional signals, it gives you immediate quantitative context that goes way beyond just looking at a simple price chart.
Yeah, it tells you how much of a premium the market is paying for speed, or how deep the discount is, and maybe where the next explosive energy release is coiled up.
Exactly. And hey, if you found this level of data distillation, this deep dive into the AI's perspective valuable, please do make sure to hit that follow button, turn on notifications. That way you'll be the first to get our comprehensive market analysis update every single day.
Definitely worth doing. Which brings us back, I think, to the biggest, maybe most philosophical question raised by today's analysis.
Oh, what's that?
Well, the data clearly shows that many of these high-volume stocks are already flagged as highly, even extremely overvalued on a daily basis. WLF, RGTI, JOBIY, NVDA. Yet many of them still exhibit powerful and consistent hourly buyer power. The short-term momentum is still there.
Right. The buyers are still active even at these elevated levels.
So this raises a really important question for you, the listener, to consider. When the AI flags such extreme overvaluation, does that purely quantitative signal of immediate momentum fundamentally trump the warnings coming from price contraction and calculated value?
Hmm. And how does a savvy trader or even an investor effectively balance that desire to ride the velocity, the momentum, against the AI's clear warnings of extreme value dislocation? When does the rubber band snap back?
Exactly. Does momentum always win in the short term, even when value screams caution? Or is the risk of reversal just too high?
That's definitely something to chew on as the market continues trading and heads towards the closing bill today. Where do you place your bets when velocity and value are sending completely opposite signals?